Gbemisola, thank you so much for joining us today. Let's have your summary. How would you describe trading at the market today? Let's start with the Treasury bills market.
Hello, Esther. Thank you for having me. So in the fixed income market this week, as you also reiterated, the market activity because of the low rate has seen a relatively quiet market. This is attributed to the 0.2% seen on the long end of the Treasury bills and 0.05 seen on the short to mid tenor. These levels have completely dissuaded investors, and attention was shifted to the bond market this week. This week, we also had OMO maturity coming on Tuesday, almost to a tune of 281 billion, and this prompted slight bullish actions as investors then bidded aggressively at the bond auction. Yesterday, there was an OMO auction, which 90 billion was on offer, and we saw that swap rates were all lowered to 2.44, 5.48, and 6.75 across the short, mid, and long tenor maturities, which was on offer. The trend so far has been that rate has continued to decline as the CBN continues with their expansionary monetary policy. So this has been the direction of the market. The bond market also in the same vein initially opened bullish at the beginning of the week, where we saw some investors try to pick some attractive yields ahead of the bond auction, which came in on Wednesday. And at that bond auction where 80 billion was on offer, subscription was double on the two maturities, and we saw yields drop to 5% on the 5.785 on the 2045, and the 2035 was inched up slightly by 3%, 3 basis points to 5%. What was interesting at that auction was that we saw yields for the participants come to as low as 3.15 for some that came in for the auction on the 2035, and we also saw 3.95 on the 2045. We also had as high as 9% on both auctions. So judging from this rate, we can see that participants at the market are divided, because it means that some are expecting yields to inch up slightly, while others with idle funds are expecting need to quickly fix up their maturities at this bond auction.
Well, how would you summarize activities at the FX market this week? I know that the CBN has been trying to strike a balance between keeping the reserves at reasonable levels and also attending to demand at the, especially offshore demand at the INE window.
Okay, so for the INE window, it's been relatively stable all week. We're seeing between the 385 levels and the 386. But the pressure there still remains, even though the CBN continues to maintain its intervention at all the FX windows. However, same can be said for the parallel market, which we saw a depreciation to 475 and 480, as we think that the huge demand backlog continues to trickle into that segment. The CBN still also maintains its intervention at the BDC arm. However, the recent pressure that is seen there can be as additional demand, for towards the end of the year and being a festive season coming. We see a lot of demand for dollar for festive season related imported goods, as well as seeing a lot of year-end travel. In my view, the foreign exchange the pressure might remain till end of the year. As I said earlier, the festive season importation will rise. There's a lot of people want to bring in their goods ahead of the December festive season. So this pressure would remain. However, the recent circular by the CBN that clarified on the position of the removal of the third party from buying Forex routed through from M has now been given a better light, and they told importers on conditions that must be met if they choose to use a third party. So I hope with this clarification on this circular, we might see some of the demand trickling into the parallel market, come back into the official window, and then we won't see this huge depreciation on the Naira coming to the parallel market. And this will help relieve the pressure in that segment.
Now, excuse me, for your outlook for next week, you did mention that investors will keep their eye on the NTB, but of course with the lackluster trading that we saw this week. And I'm just wondering, do you foresee the apathy continuing into the new week? And is there any upside? If we do see that apathy continuing, is there any upside for T-bill rates or yields?
Okay, so yeah, as you said, there's an NCB auction next week, so almost 130 billion will mature on the, I think, 26th now. And from judging from the auction of 2 weeks ago, we saw that yield for the 91, 182, and 364 days also trend lower. We saw 91 days at 0.035, the 182 days at 0.15, and the 364 days at 0.3 respectively. This rate, hopefully, we are hoping we don't see a negative rate at this rate is going. But however, I don't see as much demand going into that auction because the rates have already bottomed out. It remains unattractive to investors. That is why we're seeing a lot of investors move into the equities market. We also see a lot of clients trying to inquire about mutual funds and other forms of investment channels. However, we might see a reversal come in the new year. Might not come this year, because looking at the budget coming in for 2021, if the expected revenue is threatened by oil prices, we are hoping that we might see that most of the budget deficits will be funded by local borrowing. So what we're looking at is that come Q1 calendar, if the volume on offer is increased, it shows that a lot of it will be done locally. But come next week, if the NCB comes in, if the fact meets and also fact injection into the system,